Welcome to TradeTheMBI.com. This is John's report. It's for the 30th of May. What we're looking at here is the continuation of the move. We figured that we were supporting off of the 76% line, and it was perfect that it just, filled in a little bit of the push extreme and then got a lot of shorts excited. And as I was mentioning, that was going to be a perfect opportunity for squeezing those back out, and that's exactly how it played. And most of this was coming off of what the NASDAQ read was that the strength has all been right in the NASDAQ area, and it's just been driving force for all things. Now, yeah, positive extremes. If we look at these last series of days, of course, the holiday doesn't really count, even though it traded in European session and that it was brief. It really didn't do anything. So we'll see in a little bit as things get going. But this MBI has been super strong, and just the only short activity increase was right there. Now we're starting to see a second run. People think, well, now that we got the big bounce, the perfect opportunity to start getting a little more active. And that's one of the higher readings we've had in, week plus. So there could be some profit taking here as we close out the month. But we're going to turn around and start the following week with new fund money coming in, and that will be another big jump in cash supply for the market. Treasuries holding in right around where we would expect. It's a little bit higher, just off of exuberance. You got the theoretic debt ceiling debacle budget situation resolved, maybe. To wait and see what the vote is, how many more defections there are from the plan. It doesn't really do anything, but then it never does, because at the end of the day, they're going to be spending more money next year than the year before and accelerating even faster after that. So no real concern over that 30 trillion in debt. Oil, it's reasonable. Ideally be better in the lower 60 range. But again, the longer this tracks, the more resilient the sustained, I want to call it kind of a middle range malaise, which the Fed really loves. Not too hot, not too cold. It's sort of the porridge is just the right temperature, and they'll just keep plugging it away, keeping things in a status quo kind of setup. Um, the fact that we've eased a lot of those banking situations and that, and the extra liquidity is problematic though for the euro, because at the end of the day, who wants a euro? Especially with the rates being offered now that the bond market has caught up to reality in the U.S. It's still a more attractive play being in the dollar at this particular stage than it is anything else. So it's been a slow decline, still within the range. Um, if things drop below, though, this level, it gets to be a bit more of a concern, because then you could get back into that race to the bottom again for the euro, and that becomes problematic from a S&P standpoint, because there are so many companies that receive a pretty good chunk of earnings, and they make significant amount on exchange rate changes. So we'll see how that one plays out going forward. But they're doing enough to hold it on. And gold, without any real trauma or major upheaval, it's just been softening a bit. And we filled in those positive extremes. Now we've gotten to this positive extreme right here, leaving just the breakout move at the 1900, 13, 14 range still to go. From a Bitcoin standpoint, though, they stabilized a bit now that a lot of the fear and trepidation have been subsided from the confidence issues. And this seems to be like a regular play. They get a boost, and then they'll come up with some other problem, drives price down a little bit, allowing those to accumulate a little bit more. But certainly decent readings from an MBI standpoint. And you look at the DOC with the crossover, reasonable strength there, which is a similar move from ETH, just a little bit weaker. I think that with the MBI white rise, any fade back, ETH could suffer a little bit more of a pullback than what we see in Bitcoin from that standpoint. And then looking at it from a 50K standpoint, we had the boom and then the turnaround, and it's been just straight up. So pretty decent when you look at it from that standpoint, and you're able to ignore the noise from like a minute chart because this just shows what the trade that was taking place, and we're still in a significant rise now. We do have the breakout move from right around 4170 range. That would be the fillback of positive extremes. So that's the point to look for in any kind of significant sell, but we're not seeing that at this particular point. We look at that DOC red significantly up there. You'd have to have a quick drop back below zero for it to be of any major consequence going to the south side. And then we go back to 5K. This is the way things looked going into Friday's action. Here we are in the post market is just back and forth. I mean, I would say this is pretty even. This is where the time it looks ridiculous when you see these kinds of weird bars, and that's just what the difference between actually having the tick and that. But every time I seem to put the tick on, it just creates a problem. So either way, you can look for new indicators to be coming out, and I will update you on anything relevant. Trade well. We'll talk to you later.